What's up, traders? Welcome back to the channel. So Bitcoin's done a whole lot of nothing for a long time. On the main analysis here, we're still below the 21 exponential moving average. This was a very small weekly range, as you can see. It is coming off of a bullish weekly range after setting in a fresh yearly low last week. And tomorrow will be the close of this week, so I'm not expecting anything special today or tomorrow, but I mean, obviously we're still under the 21. So, I mean, if you want to look at that as being bearish, obviously you can. It's up to you. On the daily time frame, we are above the 21, and we have been above the 21 for many days here. We are not getting any bullish momentum from being above the 21, and we haven't gotten any bullish momentum from 21 exponential retests. The April open is also just below price at 82.54 or 534, excuse me. And it does look like we are just about to liquidate Wednesday and Thursday's double top. If I pull this up real quick, close this down, you can see that Wednesday did make a higher high than Thursday. And it does appear that we did almost already liquidate Thursday's swing high, but not Wednesday's just yet. Now, all this is coming after we put in a bearish reversal formation on the daily right here. This is a bearish engulfing candle. Obviously, it was very bullish until it got really close to the weekly 21, and that's when it showed the reversal and had a really big down day. So let's go intraday and check that out. I'm going to pull up my session volume profile here just because it helps me to explain what I'm seeing in the chart a little bit better, because it shows you the daily candle and you see the intraday price action. It shows the high, low, open and close of the day and how big the daily range is. And then here's that Tuesday engulf. So we had Saturday, Sunday. Sunday was a trending candle. Monday was an inside. And then we had Tuesday, the engulf. The bearish engulfing, you can see where it traded up there, liquidated the previous few days worth of price action and had a pretty big move lower, taking out Monday's low of day. So if we were going to see a reversal happen off of this bearish signal, then typically we would have wanted to see that come in on Wednesday or Thursday. Wednesday it did look like people did attack it. It dropped down and it did not make a fresh daily low. And then we got Thursday, a bunch of sideways price action. Thursday was inside of Wednesday. Didn't take out the higher low, though it's an inside day. And then yesterday was inside of that day. So a lot of sideways choppy price action going on. And this sell signal that was triggered on Wednesday did not get any downside follow through. So this could lead us to believe that we are seeing a bit of accumulation happening, right? I mean, obviously, if the sellers can't push it under 85,000 and keep it under there, then it does look like buyers are buying it. But here's the thing, it looked like that on this day too. You know what I'm saying? So just be very careful when it comes to terms like accumulation, distribution, things like that. Be very careful, because those are general terms that are usually used when analysts are doing hindsight analysis, right? Like, it's very easy to look back on an old chart and say this was accumulation because we can see that price traded up and out of the formation, therefore it was accumulation, and vice versa for a distribution formation. But it's always in hindsight. When the actual pattern is forming or being built, it is impossible for us to tell whether or not it's accumulation or distribution. We won't know until after. But there are ways that you can assume that this is a distribution formation. For instance, we are down on the year. We are under the yearly open, so that means this yearly candle is bearish. And we are below the weekly 21 exponential moving average. So price is still bearish, even though we are seeing here as of late, the bulls have thwarted any downside move. It still isn't really showing us any bullish momentum either, though. So basically what we have here is a consolidation formation, and we will not know what that formation truly is until we get out of the consolidation. Then we will be able to go back in hindsight and say, look, this was accumulation, obviously. Now, there are a couple other bullish patterns on the chart that I see. There is a clear failure to show us bearish continuation here. It is a 3-drive bottoming formation. Once again, this will only work in hindsight if it is a bottoming formation, because we won't know until we get back above the 2025 yearly opening range if it was a 3-drive bottoming formation or not. But we can trade it to the upside. That's why I use simple and exponential moving averages. I only use the 200 and the 50 on the simples, and that's just to see when we have a simple death cross or a golden cross. My strategy tells me that I should be a buyer when we start closing daily candles above the 21 exponential moving average. As long as we're above that, then typically that means we are above the 50 on the RSI as well. So on the very near term, that just says, hey, the bulls are kind of holding their own turf here for right now. Okay, so with all that being said, what is your analysis, Trade Talk? Well, that's just it. I have no clue what's going to happen on the long term. Right now, I could simply say the sellers are still in control of price on the weekly time frame. On the monthly time frame, we're above April's open. We're actually above March's open now. Right here's March's open. So if we go look at the monthly time frame, we have a bullish candle on the month. And we're trading above last month's open. Not super bearish, right? It's not super bullish either because we're still down on the year. But for right now, the beginning of April, the beginning of Q2, Bitcoin is in fact potentially showing a little bit of seller exhaustion. Now that seller exhaustion can end at any time. Like if there's a big tweet or something that comes out from Donald Trump saying, 100% tariffs across the board, everybody's getting them, I'm mad at everybody, then obviously this is going to sell off harder. I mean, you're going to need a macro fundamental news break in order to cause Bitcoin to get any major move right now. So as long as the VIX is going lower, we know as traders that we typically want to be more bullish than bearish, because when the VIX is slowly coming off of its highs, it typically means that you're seeing an upside move in the S&P 500. And we do know Bitcoin is traded as a risk on asset. So let me go over here and talk about gold real fast though. Bitcoin sold off in January. We made a fresh all-time high, taking out last year's high, which was the all-time high. So we made a fresh all-time high and then we rolled over. So this is clearly profit taking. And then if we go look at gold at the same time, right here, what is gold doing? It's going up. It is going up. I mean, the S&P 500 down, the NASDAQ down, the US 30, the Dow, it's down. So really and truly, the only thing that's really moving up in this period of risk is gold. So that leads me to believe that the majority of people that caused the move lower on Bitcoin, all the real sellers, they just rotated that capital from Bitcoin into gold. So for me to see or to expect a really big move on Bitcoin, I would probably want to see gold come off a little bit. Show me that profit takers, or that there's profit taking going on inside of the gold. That way I can say, hey, if those profit takers come back to Bitcoin, then maybe that'll give us a little bit move higher, because Bitcoin will move a lot more than gold will. For gold to move $1,000, that's a huge move on gold. Whereas right now, Bitcoin's doing that every single day. So maybe the big investors, the institutional people that took profits on Bitcoin, moved into gold. Once they start to rotate that capital back into Bitcoin, then we can get really bullish on Bitcoin. But for now, on the near term, even though we're about to test, or maybe not, the weekly 21, we are above the daily. So we can look for bullish scalps. Now, with that being said, there are two big liquidation zones that you need to worry about. One is about 86.2. You can go ahead and call it 86.5 if you want. There's a lot of liquidity setting above Tuesday's swing high. I know that because liquidity sets above every swing high and below every swing low. So your major liquidity points on this chart right now are going to be below Saturday's low, which is 82.7, and above Tuesday's high. Everything inside of here is just chop slop. Piano keys, it's sideways as it can be. We broke and closed above the daily 21 on Friday the 11th. We've shown bullish continuation and bullish momentum the following Saturday after, and then we went straight into a consolidation phase. So one could argue that on the very, very near term here, you're putting in a bull flag, but This flag is almost as big as the flagpole. Not really a bull flag either. I would just say that it's consolidating. Bitcoin has acceptance at about 85K, right? Above 85K. It has been in the past sold off, and below about 83K, it has been in the past bought. So right now, price is just banging back and forth, those big liquidity zones, finding acceptance. And eventually we will know who wins, the buyers or the sellers. So let's go look at those liquidity zones on the heat map. So you can see them here. I mean, big, bright white light there. That means a lot of liquidity. Big bright light down here, and it pretty much sits. It fits, right? 83.5 is where the bottom edge of the thick liquidity is, and the top edge of the thick liquidity, 86.2. Once again, that fits right in our analysis here. 86.4 is where Tuesday's swing high is. Tuesday's swing high was a bearish engulfing. We did not see that downside continuation. So, I mean, it leads us to believe that, at least right now on the very near term, the bulls are kind of sort of winning, unless the sellers are just going to hit it again once we get up here, 85.7. We can see that there is a point of control way up there. That happened on Tuesday. So when we do liquidate this double top right here for the last, these 2 days, when we liquidate those, it's safe to say that we come up here and test this 4-hour high close. And it's not an all-time high close. It's just an inside this consolidation high close. If we turn that off, you can see right here is the highest closing 4-hour candle that we've gotten since Tuesday, since the bearish engulfing. So that's going to potentially act as a little bit of resistance. Then you have weekly resistance right there. I'll show you that. There it is. And then the weekly 21. The 3 big chunks or areas of potential resistance. So if you believe that Bitcoin is going to stay range bound for a little while longer, then the trade that you should be looking for is you should be looking for a liquidation above Tuesday and then a failure back into the range. And if that happens, you can then potentially look for shorts. If you get a bullish close above that, like on a daily closing basis, and then the very next day you get bullish continuation, I would say the shorts are done for now, right? At least until you get up here to 88.5. And the same goes for the downside. If we do get up here, liquidate this big block of liquidity up here, and then fail and get back into the consolidation formation, then I want to be short, right? Because I'm expecting the next area to be liquidated down here at 83.2 and to be short from 86.4-ish down to 83.2-ish. That's a pretty decent trade. Pretty decent trade. And the same will go to the downside. If we get a downside break and close, we get back under the 21 exponential moving average on a daily closing basis, and we see downside continuation days after that, then obviously I want to continue to hold that short. It does look to me that it is looking to potentially liquidate that top bulk of liquidity first. Could it liquidate Wednesday and Thursday's swing highs and then get back into range, come down here, liquidate this, then go up? Yes. Yep. Unfortunately, anything and everything can happen, and that's why I have to prepare you for anything and everything. Hopefully, you found something useful in this video. Thank you guys so much if you've stuck around to this point. Make sure you all trade safe, trade smart, and as always, happy trading, everybody.